So, Grace, could you kindly take us through what unit trust funds are?
Unit trust funds is a collective investment vehicle where different investors pull their funds together and they're invested in different investment assets by the fund manager. And it's basically regulated by the collective investment scheme regulations. And even the finance operations ensures that the fund follows those regulations.
Okay. And what are the importance of investors having unit trust funds?
By a client investing in the unit trust fund, they are provided with better bargaining power because they are investing in a pool of funds and they're able to generate a better return than they would generally get when investing on their own. They also access professional investment management at a reasonable cost, and they also are able to diversify their investments. So it generally provides a very good investment option for meeting your financial objectives and growing your wealth.
When we talk about investors, who are these investors?
For the investment, you can invest both as an individual and also as a corporate. Individuals, whether you are salaried in business, you can invest as a chama, a school can invest, basically depending on the financial objective that you want to meet. And we have different unit trust funds to align to the different client investment objectives.
So, Grace, what are some of the key financial metrics that investors should look out for?
Obviously, one is to look at the performance of the fund, what kind of return is the fund generating, because you are investing to grow your wealth. The second one, you also want to look at what percentage of the fund asset is being used to settle the expenses of the fund.
Okay, you've mentioned something about return. Is this return in terms of money or percentage?
The return is usually disclosed in terms of a percentage per annum. So you want to look at, and the return would generally, to see whether the return is competitive, you would look at what the industry is providing and the general market trends and economic conditions. And these rates are published on a daily basis. So any investor is able to have a look at what Madison Unit Trust Fund is offering as a yield and compare it with the other unit trust funds that are publishing.
Okay, thank you. So, where can investors get these financial metrics?
The rates are published on a daily basis in the Daily Nation and the Standard and Business Daily. They're also available on our website. For the financial reports, they're available on our website, and we also publish them on a half-year basis and full year in the newspapers, so somebody is able to see how the fund is performing. And on an annual basis, the unit holders also hold an annual general meeting where they're able to interrogate the performance of the fund for the previous year.
So, what is the role of the finance department in relation to the unit trust fund investors?
Obviously, one of the key roles is what I say, the reporting of the performance and the operations of the fund. The second one is finance ensures that the service providers of the fund, basically the trustees, the custodian, the fund managers, the auditors, annual general meeting providers are paid their dues in good time and in line with the agreements that have been put in place. The other thing, we ensure that the fund is compliant with the regulations of the Capital Markets Authority, the tax laws of the country.
Yes, so you have talked about some technical jargons. For example, when you talk about unit holders, so what do you mean? When you talk about yield, what is a yield?
So for the unit holders, every investor buying into the fund buys a unit of the fund, so they become a unit holder. More like how when you buy shares in a company, you're a shareholder holding a number of shares. So when you invest in a unit trust fund, your money is converted to units. And like for money market, for every shilling you invest, is equivalent to a unit. So if you invest 1 million, you have 1 million units. If you invest 100 million, you have 100 million units. If you invest 5,000, you have 5,000 units. So by virtue of buying those units, you become a unit holder who now has a right to share in the incomes that are being generated by that fund. And the number of units will determine what the proportion of the income of the fund that you'll share. In terms of the expenses of the fund has key stakeholders that oversee the running of the fund for the benefit of the investor. One is a trustee, so they charge a fee, will form part of the expenses. They have the custodian bank who keeps the safe custody of the investments. They also charge a custodian fee for safekeeping and also for transacting on behalf of the unit holders. We have the fund managers ourselves who also charge a fee for making the decisions on where to invest. We have an external auditor who will audit the financials of the fund at the end of the year. They'll also charge an annual fee. And the unit trust fund is also required to hold an annual general meeting, and that will also come as a cost. And we'll pay the different service providers the annual general meeting costs. And all these costs are stipulated in the incorporation documents of the unit trust fund. So, and there are contracts that clearly says what percentage will be charged by each stakeholder, other than maybe the AGM, which will depend on the costs during the preparations of the AGM. But the role of the fund manager as the administrator is obviously to make sure that those costs are reasonable so that the investor enjoys the maximum return.
Okay, so you want to say, as the investment managers, when we keep the expenses low, it is more beneficial to the investor.
Yes, it is.
Okay, another question I might ask is, why should I invest my money in a unit trust fund instead of a SACCO?
The SACCO has its place, but the beauty of investing even SACCOs do invest in a unit trust fund as part of the investment process, because the trust fund is a vehicle that can be used by different players. One, as an individual, it will provide you better bargaining power than you would if you go with your 1 million to the bank and try to invest it versus trying to come and invest in a money market fund. You have better bargaining power and better returns in a money market. You are accessing professional investment management, which you would ordinarily not want to incur with your 1 million alone. When you come to invest, you'll be investing in diversified assets. Your assets are not placed, say, in one bank. They are placed in different investments, and those investments are regulated, and the regulation has guided on how to invest them.
You have talked about the role of finance, and I've heard you talking about accounting and reporting. You have talked about compliance, and to the investor, and with this changing tax landscape, does the investor have any, especially individual investors, do they have any other obligation when they invest in unit trust funds?
So the unit trust fund, the Madison Unit Trust Fund is tax exempt. That means that when we're investing, the incomes we get for the fund will receive them without any taxation. But at the point of distributing this return to the various unit holders, we will look at the tax status of each investor, whether it's a corporate or an individual. For individuals, some have tax exemption certificates, so their income will not be subject to tax. Yeah, for those individual investors that don't have a tax exemption certificate, their interest at every distribution at the end of the month, or if they are withdrawing, will be subjected to a 15% tax, which is remitted to KRA. And they have no further obligation in terms of filing a return. It's a final tax. So when they come to doing their annual returns, they will not be required to file that. But for corporates, we file and generate a withholding tax that goes to their end. And when they are filing their annual returns, they are able to use that withholding tax to reduce their tax liability.
Okay, thank you. So, as a closing remark, what are the assurances that, or what is the assurance that the finance department give to investors at Madison Investment Managers?
By investing in the Madison Unit Trust Fund, you'll be investing in a fund that is that reports in a very transparent manner. It gives a lot of information in their financial reports, so you're able to monitor your investment and how the fund is running. And you're also assured that it is making sure that it complies with the relevant laws, whether the Capital Market Authority regulations and the tax laws of the country.
Thank you, Grace, for taking time to tell us more about unit trust funds. I know many investors who are not aware of this kind of investment vehicle, but thank you for demystifying the terms that are used and how people can have more options when it comes to investment. I know many people are used to circles, they're used to just saving their monies in the banks, but now at least they can put their monies in a safe instrument called unit trust funds. And thank you for sharing, giving us insightful information about the unit trust.